Friday special Midcap Mania with Nigel D'Souza. Some interesting stock on his radar today. Let's find out more. Nigel, over to you.
Well, Sonia, you were covering the tyre industry very closely the entire of the last couple of weeks. And the stock that I've picked up is Indag Rubber. What does the company really do? They're into retreading of tires. To just explain our viewers very simply, you remember those years ago we used to look at that cheese being grated, and the peels keep falling off. So this basically is when one layer goes off, you retread it, you put another coat, or in fact in your childhood when you used to go on a cycle, and in fact there used to be a puncture, you should cover it up with one bit of rubber. So this is what really the company does. Really, when your tire gets worn out, either you buy a new tire, or in fact you go in for retreading. Why do you go for retreading? Because it's a tad bit cheaper. It's only 30 to around 50% of what the cost of a new tire will be. The key factor here is that the sides of the tire should really be maintained. That should not be damaged. Then you can go for retreading of the tire. To give you some facts about it, the cost is only around 30 to 50% of the price of a new tire. In fact, it lasts as long as that. And in fact, in terms of natural rubber prices, well, only 25% is required. In a new tire, nearly around 80% is required. And in terms of even the crude oil, only 7 gallons are required. Normally, in fact, 22 gallons are required for a new tire itself. We're just getting some kind of interruption, so we will just focus on the stock yet again. Now, in terms of market capitalization, the total market cap is nearly around 530 crores approximately. It has no debt whatsoever. And the cash and cash equivalents in its books is nearly around 91 crores. So the core market cap is nearly around 450 crores. They have been adding capacity as well. And as per their presentation, now in fact the capacity has gone to 20,000 million tons approximately. It's been gradually adding. In the last 1 year, they've increased capacity by nearly around 50%. The distribution is key really in the retreading industry. And that is in fact is something that Indag Rubber has been very good at. They have 100 to 150 dealers, and in fact more than 1,200 retreaders all across the country. The dividend payout ratio as well has been very good, between around 19 to around 20% in the last few years. But what's the use of all this when the financials haven't really grown? In the last few years, the top line has been what? Between 250 to around 300 crores, 230 to around 250 crores. The operating profit as well hasn't really grown that much. And in fact, the profitability 25 to around 30 crores. So it hasn't been a really big CAGR story. But there are various cues really. If you're going ahead and if you're looking at the triggers, implementation of GST is very important, because a large part of this market is an unorganized sector. Increase in CV sales as well, that's another factor, because where is retreading done? It's primarily done only in commercial vehicles. And finally, increase in radialization in the CV segment, that's what will help them. If you take a look at the market, as of now, the market really is divided into cold as well as hot process. The total market size is roughly around 3,300 crores. And in the cold segment, where this company operates, over there, that is nearly around 66% of the total market. So that'll be nearly around 2,200 crores. And out of that, there is around 1,000 crores where this company really participates. So there's a whole market of an unorganized sector really that can be tapped into if GST does come into play. So that's nearly around 1,000 crore opportunity that the company has. Remember, as of now, they're doing only 250 crores. And prima facie, it appears that they're only operating at around 50-60% capacity utilization. On a PE basis, Sonia will be tracking this very closely. Tire stocks, they trade at what? 8 to around 10 times. So this is relatively expensive. It's trading at already around 17 times. But a closer look, if you look at the ROE, well, that's trading that will give you a number of around 22%. That's the profitability upon the net worth. If in fact you look at the ROCE, then it's in fact 31%. But you need to keep in mind that they have cash. So you'll be reducing that cash from the net worth. And the ROIC really is the key kicker over there. That's coming in at around 51%. So that's fairly good. In the ROIC calculation, I've deducted the tax as well. So some people, they keep the tax, but this calculation is based on reducing the tax. Finally, promoter holding at around 75%. The Kemcars really are the promoters. And if you just Google, you'll see that they have a wide reach in Russia, in Europe, etc. Big conglomerate in terms of the Kemcars, and also a couple of big holders. So there, Infina Private Finance Private, they hold around 1%, and Shivani Tejas Trivedi, that as well as a renowned investor, that holds more than 1% in the company. What are the drawbacks? Dumping of Chinese tires. Forget our tire industry. These guys will get impacted more, because you'll say, why should I go ahead and retread the tire, rather go and buy a Chinese tire? And finally, also there were some excise duty benefits that they were getting. That as well has started reducing. So that really is an interesting stock, Sonia. that presenting.
Okay, Nigel, thanks a lot for that. Standard disclaimer, of course, this is not a stock recommendation. Let's move on and discuss some more